Aloha YouTube. How is everybody doing today? My name is David Yansen. Welcome to my channel. Today is September the 28th. It is Monday 2020. We are looking at my Fidelity brokerage account. I just did a video highlighting 3 of my holdings in my Robinhood growth portfolio. If you want to check that video out, it has just uploaded like 6-7 minutes ago. And I will have another video on my Roth IRA later on today, which would be evening time here in Hawaii, but might be early morning time or late night time for people on the US mainland, depending on which time zone you're in. And if you're on the other side of the world, it'll probably be morning for you, or midday, depending on what country you're in. But welcome to my channel, everybody. If you haven't subscribed, please subscribe to the channel. Everybody who has subscribed already, big mahalo. Thank you to you for subscribing and supporting the channel. Please hit the like button, as that also helps support the channel as well, and feel free to share with your family and friends if you find the information in my videos informative. I do have everything organized in playlists of all of my brokerages, and even some of the brokerages that I opened just for the free stocks. I still did playlists for them, so it's easy to find all that information. And if you are looking to get any free stocks with Webull, Doe Finance, public investing app, I've got tons of links in the description down there for you. Robinhood, if you haven't started with them yet. M1 Finance is still my favorite brokerage, but I did do a video on why I decided to switch over to Fidelity with one of my accounts. My Roth IRA is still in M1 Finance. I plan on keeping it there for now. I don't really actually see any reason to leave them. I do see more reason on why I like M1 Finance, and it was really only this one small thing that I didn't like. I guess it wasn't small. It was kind of significant when it comes to buying and selling same day. M1 Finance at this time doesn't allow that. But they were the first to do fractional shares and no commissions. Robinhood was the first with no commissions, but they didn't allow fractional shares. So eventually I moved to Robinhood to get away from the fees and the commission fees from Stash app and Acorns. And then I found M1 Finance when I found them because I was looking to do more fractional share buying. And probably of the $14,000 or close to $14,000 that I have invested in the U.S. stock market over all my brokerages, it's not just in Fidelity, but including my Roth IRA, Robinhood, and Fidelity. And then a few holdings that I have in Webull, and then the free ones that I have with the other brokerages. It's probably close to 14,000, if not over 14,000 now. And that's 14 months or so, 15 months of investing in the stock market. So I still consider myself a new investor, so leave some comments if you have any comments, suggestions, opinions on any of my videos that you happen to look at, as it is welcome, because I'm still trying to learn. So I read things on Reddit and I read things on the website, and just to get other people's opinions and stuff like that. So looking here in my Fidelity app, as you can see, it shows here that the US stock market has closed, and the Dow, the Nasdaq, and the S&P 500 all ended in the green for the day, which is nice. But for the month of September, the U.S. stock market has not been good for this month. I've been calling it Slumpy September, just because it has been very volatile. It has been all over the place. 3-4 days red, 2 days green, vice versa. 1 day green, 4 days red. So my personal opinion, maybe people are buying for Christmas presents. So because tech has been kind of dropping the stock market a lot, even though today finance was kind of leading the stock market. But your FANG stocks, your Facebook, your Amazon, your Netflix, your Google, all of those have been dropping through the month of August. And my personal opinion is people know that those companies grow, so they invest into them. And as soon as the price jumps up, 40, 50, or $100, depending on how many shares that they buy, they invest into that company, they sell out. Maybe because of the holidays and they're going to have to drive cross country versus fly, or maybe some of them are still going to fly, but there's limited seating on the airlines and stuff like that. So it's just my personal opinion, but maybe September is just typically like this. if it is, again, my opinion, the holidays coming up and people need more liquid, so they cash out. So let's go ahead and look at my accounts here. I did do some buys this morning. Made one sell today, and I'm going to take that money. I'm going to put it into my Roth IRA. I try to keep everything as organized as possible. That's why I like these apps that are very organized. Fidelity, I don't really see that way. As you can see, I am up for the day in here, almost $5,000. At one point, I was just over $5,000 with this account, but with the volatility that the month of September brought, it dropped me all the way down to $4,600, and now I'm back to $4,900, which is nice to see. So hopefully I can end the month at $5,000 or a little over, but we'll see what happens. And with the volatility of the presidential election coming up, and this person leads in this poll, and this person leads in another poll, and maybe a certain party isn't really repeating or giving their information when they are asked in a poll. The stock market likes to see stability, and with an election year, there's not a lot of stability, as we don't know who's going to be reelected. So, who is going to be elected or reelected. So, looking at my positions, you can see now I'm down to 6 shares of Verizon because those fractional shares were liquidated when I transferred my account when I transferred my individual account from M1 Finance over to Fidelity. But I did buy 2 shares of AT&T today. I did do a limit by $28.56 per share, so I put in $57 and some change. So now I am up to 10 shares with AT&T, which is nice. Their dividend is great, and AT&T still has really good cash flow, so I plan on holding them long term, especially seeing how this CEO is focusing on reducing their debt, and they've done a pretty good job of reducing their debt over the last he hasn't been CEO for a long time, but I think they had been focusing on that even before he got there. Like, they're still looking to sell off Dish Network. So, and then at one point they were looking to sell Warner Brothers, the video game portion, which I personally don't think would be a good idea, not just because I own EA Sports and Activision, but it's a $200 billion cash cow. So, and they own all the DC Comics side of video games. So, PlayStation 5 is coming out new. There'll probably be another Nintendo Switch coming out. Xbox has their new Xbox. Both of those, Xbox and Sony, are coming out in November. So there's going to be new games for those new consoles. So in my personal opinion, hold on to that branch because it can generate some more income for you. And then hopefully once Warner Brothers movies start firing up again, the stock will see a big jump. Even if it gets to $50, I'm happy. I think it potentially could get over $50, but some of the things that I've read, AT&T is kind of positioned to get to $50 long term, and we're talking like 5 years or so out. So pretty much under $30 is when I make my buys, unless there is something else. My strategy is still the same. If there's something else that dips further that typically doesn't dip, then I'll buy them. Otherwise, I buy the ex-dividend date. If there's no ex-dividend date that's approaching really soon, then I will kind of go into AT&T. But I almost always have an ex-dividend date for this account where I'm buying into. The other day, I bought into AbbVie. But going back to what else I bought today and sold today, let's go over to my activity here. Orders, I bought a little bit of Tesla, again, fractional shares. Fidelity supports fractional share buying, so I put $57 and some change into Tesla. Tesla's just, actually it was just $50. That's the one that was canceled, so this one was today, this one was on Friday. So Tesla is just, in my opinion, not just going to dominate the EV market, but moving into the utility as far as charging for not just their cars, but possibly small cities as well too. So I would like to slowly just put a little bit more into Tesla, especially seeing how they did the stock split. Originally, when I first bought into Tesla at under $100 fractional shares on M1 Finance, I ended up making over $400. $200 I took from it and bought Costco. and then the other $200 was liquidated when I made the transfer over here to Fidelity. So, and then I sold Realty Income. I sold 5 shares of them. All of my REITs, except for one REIT, Stag Industrial, is in Robinhood, and that's just because at the time that it was trading at like $24 or so, I thought, okay, I'll just pick up 3 shares of them really quick in Robinhood, and they'll just be one of my 3 or 4 dividend stocks in Robinhood. But I have all my slices and my pies in M1 Finance, and I like to keep everything kind of compartmentalized and organized. So the majority of my REITs I'm going to have in my Roth IRA, so in M1 Finance in that slice. So sold out of this at $61.82. I made a little bit of money, not a whole lot. I think my share price was, see, this is one of the things that I don't like about Fidelity, is it doesn't show you that stuff once you make that sell. It was about $58, so I made a couple dollars per share on the 5 shares, and then I'll just take that money and I'll put it into my Roth IRA. So those were my moves for today. I appreciate you supporting the channel by subscribing to the video. Hope you have a great, safe, and healthy day. Mahalo and aloha, everybody.